Welcome, everyone, to the Clinton Donnelly Show. I'm excited to bring back on Jake Claver from the Digital Ascension Group to have a discussion about wealth management and how you custody your assets, also planning strategies for your wealth. I think this is an exciting topic, especially as we're looking now at the beginning of an exciting bull market. So I hope you enjoy this show. Please stay tuned. Welcome, everyone. I'd like to introduce to you Jake Claver from the Digital Ascension Group. Jake, why don't you tell us just real briefly about yourself and how people could reach you if they wanted to follow up?
Yeah, absolutely. Thanks again for having me on, Clinton. So Jake Claver, I'm the director for Digital Ascension Group. We are the only multifamily office in the U.S. that specializes in digital assets. So we work with fantastic professionals like Clinton, CPAs, accountants, wealth managers. We have an RIA underneath the firm, which is Digital Wealth Partners. Provide custody for our clients and a full breadth of solutions when you come into 20, 50, $100 million in digital assets. We try to make sure that we can fill all the gaps that you might have for the estate planning and all the other things I mentioned.
Well, thank you very much, Jake. We're recording this at the beginning of June in 2024, and very turbulent times where everybody's like pins and needles thinking that the market's going to take off, and hopefully it does. But it's also an election year, and this is a crazy election year, probably the craziest I've ever seen in my life. And there's a lot of national politics about Bitcoin and other cryptocurrencies. As you step back from your perspective as a wealth manager and people looking to do long-term planning for how they allocate their wealth, how do the current events influence what you are seeing? Not just the political side, but also the fact that we're looking at a market that might go up pretty significantly. What are your reflections on that?
Yeah, so we always try to take a long-term approach with our clients. We're looking at decades or even 100 years if it's a family office that we're working with. But obviously, you want to be making good decisions in the short term here. I see a lot of capital on the sideline, just because of a lot of the things that you mentioned. People have pulled back from positions. We've seen a lot of our clients scale out of the stock market and real estate in anticipation of some downward movement there. People just hedging themselves, making sure that they are in a cash position to be able to take advantage if things do go south. But then you have, the other market dynamics that you mentioned as well. If we did not lower rates yesterday, so that's going to mean the U.S. dollar is going to continue to appreciate in comparison to other currencies. A lot of geopolitical and macroeconomic events playing into, what we're looking at for our clients. I do anticipate a very significant bull run in digital assets, potentially with the actual usage of these assets to potentially, as the problems occur, if we do see some downside in the market, I think that they could step in and start using these assets to backfill or fix those problems, facilitating transactions, instant settlement, providing liquidity. And in that circumstance, I think there's maybe some assets that have been overlooked by people that will see some really significant appreciation. And, you had mentioned before we got to this, kind of what it looks like to take profits or some different strategies around that. So did you want to hop down that rabbit hole?
Hey, that's an interesting topic. I talk to clients all the time, and they tell me their investment strategy, and many of them failed to get out of the market when they hoped. What are your thoughts?
Yeah, so hopefully they're taking advantage of the wash rule that doesn't exist in digital assets, right? So if they wrote it down, maybe they're going to sell at the bottom and capitalize some of those capital losses and then buy their positions back. I'm sure that you work with people to use that to their advantage when you're consulting with them. But maybe that's a way that you can kind of hedge yourself on some of the gains to be able to offset those tax implications. Go ahead and sell some losses now to be able to backfill those and stack them up. And then on the other side, we work with our clients to mitigate taxes similar to yourself, diversifying their profits into other assets that we can use accelerated depreciation on. Real estate's fantastic. Use the cost seg there to be able to offset some of those tax implications. If the assets are held in a good entity, maybe an LLC or an LTD or a trust, we can set up life insurance policies and pre-fund those. And then so you still have access to the liquidity. Maybe you diversify, those profits into other investments inside those insurance policies. Um, anyway, so that's a benefit. And like I mentioned, Section 179 of the tax code, you can use accelerated depreciation on vehicles or other large equipment that you might need for your business if you are a business owner. So, vehicles over 6,000 pounds. I don't know if people that you deal with like jets or other things in that category. You might even syndicate a larger piece of equipment with other individuals and be able to take some of the cost seg and depreciation back to you to be able to offset things. Another thing that we look at often is a charitable remainder trust. Setting those things up depending on if you have philanthropic interests. But there's a lot of different tools, that people can use on the other side of appreciation if they do want to cash out. And again, we try to be proactive and make sure that their assets are held by an entity so that they can use the full tax code to be able to offset some of that income when they do take those profits.
So I had to put my headphones on because the audio wasn't working right. But Jake, when we were talking before, you mentioned the topic of charitable remainder trust, and the IRS has basically called these out for a special audit observation and examination. So they become slightly higher attention for possible audits. I know you guys are involved in that. Many clients need it. It's a legitimate investment tool, a trust, charitable remainder trust, but they have to be executed correctly. What things do you do at Digital Ascension Group to help make people be compliant in those sorts of things?
Yeah, absolutely. So you want to make sure that the assets. It's a tool for when you want to take profit. And you really do have philanthropic interests. So a lot of our clients already have a charity or foundation that they want to make an allocation to or leave their assets to upon their departure, and with that, you are able to mitigate a lot of the taxes and also set yourself up with a little bit of income. But you definitely want to file the returns, like you mentioned, for these separate of your other tax returns, and you definitely want to make sure that it's structured correctly. You're working with a professional that this is what they do, not just somebody that's kind of ad hoc. But you put the cash that you're going to take out of these investments in digital assets in there. Oftentimes people choose annuities and the other things that we advise our clients on to make sure that they've met the criteria for the risk associated and the diversification required for these types of trusts. And at that point, if you do get audited, there's always a trend with the IRS. They're going to find something else where people are finding loopholes. But if you're doing it and it's buttoned up and you really are doing it to have philanthropic interest and make donations and help charities or the foundation that you've set up as the underlying beneficiary, then you're not going to have any issues.
That's good advice. Charitable remainder trusts have certain criteria in terms of the long-term value of the account, and I would always advise someone, if you're working with anyone, get a second opinion on the estimates of the life expectancy and the payout values, just to make sure that you're not too close to the edges where you'll fall off into a place to be a non-compliant. That is great stuff. I mean, I'm really excited for my clients who are looking to check out, looking to really take their profits at this in the end of this bull run. What should someone do in terms of thinking about planning that exit strategy? I mean, not necessarily the particular investment devices, but if you're just somebody who's sitting on a big chunk of crypto and you're going to be exiting this year or next, what can they do today to start to inform and educate themselves?
Yeah, absolutely. So we have a mastermind group that we have many people that are a part of. If that's something that you're interested in, I'm sure Clinton will be nice enough to put it below in the links for this video. But you want to be proactive. You want to educate yourself on tax law, estate planning, the other types of investments, or surround yourself with other professionals that understand all those things before price appreciation happens. Um, when the money shows up, you don't really know people's intentions. The people that are willing to work with you before that happens and might also be participating with you in some of those uh, liquidity events are probably going to be better suited on the other side of it to also help you. Um, and then the other thing, like I mentioned, we do a lot of proactive stuff as far as establishing LLCs or trusts for our clients previous to price appreciation. There are gift tax thresholds depending on what jurisdiction you reside. The U.S. has a lifetime gift tax threshold of 13.6 million per individual right now, which is the highest it's ever been in our lifetimes, and it's anticipated that that'll be reduced next year. If you anticipate your assets appreciating beyond that, you do want to protect them, and you don't necessarily want to exit, or even if you do want to exit, you could be better suited by setting things up now, previous to the liquidity event, rather than after.
That sounds good. That sounds good. One of the things I've noticed, I think has become really apparent in the last, this 2024, is the incredible interest that institutions have in getting into the crypto market space, particularly Bitcoin, and now I guess increasingly Ether and Solana. We've seen the ETFs, Bitcoin ETFs be approved, perhaps Ethereum ETFs in the future, maybe others. And big institutions are getting into this. BlackRock now has something like, I think, approaching 2% of all the Bitcoin. This is massive. This is a massive shift. And I know that you guys at Digital Ascension Group are unique in that you offer custodial services and wealth advisory in crypto. And there's very few companies that do that. But now this is probably because the institutional investors are moving in. You're probably getting much more support from your underwriters, your insurance providers, and as well as your custodial providers. How do you see this maturing, and how's that going to be affecting your business going forward?
Yeah. So SOB 121 actually kind of helped us out a little bit um, without the repeal, right? So Biden vetoed that, and it's still kept the banks at bay from holding digital assets. So to your point, we are one of the few wealth management groups here in the U.S. that does provide this for our clients. It doesn't make sense for everybody. I'll just say that up front, right? So there's a lot of people that are of the mindset, not your keys, not your crypto. And I would give a lot of credence to that. We've seen FTX and we've seen Celsius and Voyager and all of these other problematic things happen where you were in omnibus accounts, your assets were commingled, they were rehypothecated and leveraged, and then basically they were owed back to you, and those companies went bankrupt and stole a lot of the wealth from this space over the last couple of years. The way that we differentiate ourselves is we only work with qualified custodians that have segregated vaults where your assets reside and are insured, completely separate, never commingled with other clients that we have. And you still actually have the capability and own the keys to the vault, right? So you are the signer on the account. We provide an ancillary signer if you need one. If we manage the assets, obviously we're an authorized signer on that. But there's, to set up an asset protection trust here in the U.S., the way that this was done before these qualified accounts existed was you would write down the keys for your Bitcoin wallet or your Ethereum wallet, whatever you had, on a piece of paper, and you would cut it in half, and then you would give your distribution trustee the other half of the keys to your wallet and basically delete it off your devices. And so you had to bring those keys back together, reestablish the wallet, and then they would be able to send the transaction. With our stuff, you can involve the trustee on the account. You can mandate that they're a signer. They can be the primary signer on the account in order to be able to execute a transaction. The keys are sharded and held in level 4 facilities across HSMs on an algorithm. They're never viewed by a person, and that's why Lloyd's of London will insure it up to $50 million per vault when working with us. Whereas, if you're holding it on your ledger at your house, you really don't have any recourse. If you give somebody the keys, if somebody else takes it and executes transaction, a lot of our clients, their concern is, they may be a little later in life. They know that they're not going to stick around for forever, which is kind of morbid, but um, it's a reality, right? And so in those situations, if your significant others aren't proficient with these wallet devices or understanding of what this stuff is, it could just be lost, right? I had a client that showed up a few weeks back. Her father had bought Bitcoin at 7 cents, and it was still on a hard drive on his original computer. And so her and her four siblings were going to end up with about 100 Bitcoin apiece. Um, so just stories like that, they were able to get into it and get the assets and go through probate and get them distributed, and they were all reasonable with one another, which was nice. But they were not listed in a trust. So there's just better ways to do it, and we want to make sure that the beneficiaries that you want to have these assets, if you do pass or when you do pass, are ensured that they're going to get it, and you do have people that can step in and manage the assets appropriately on the other side of that as well.
That's so true. I had a client, he had accumulated a significant amount of cryptocurrency, and he was a younger guy, maybe in his 30s, and he abruptly died. And his parents, who knew nothing about cryptocurrency, and trying to handle the dissolution of his estate, were at wit's end to try to open it up. They contacted me and said, like, do you know how to get into this? And I know nothing about his keys. I don't know where he stored it. I don't know his
Right.
keys. I don't know, and nobody does. They died with him.
Oh my gosh.
Yeah. It's not uncommon.
So you just don't want that situation to exist, and we provide an outside party to make sure that this stuff happens for you, right? It's very unlikely that we're going to be on the same plane or car, or there's just different accidents that happen, right? You and your spouse, it's a horrible reality, but that does take place where both of you were to pass, and maybe you have a small child or other dependents. Um, anyway, I don't like talking about it because it is morbid, but
It's
we
not,
want to
no,
make
it's reality. I mean, we talk to people about it all the time. He's got the right vocabulary.
it's the insurance, right? You want to make sure that you're mitigating risk and being responsible with these assets, and qualified custody helps you do that.
Absolutely, absolutely. And it's true what you're saying about, if your plan is, well, I told my spouse I saved all my keys in this piece of paper in the top drawer of the dresser, that's not going to help if both of you are injured or both of you perish. Will the children and the inheritors know where that top drawer is? Will they know something's there? Will they even know that the asset exists? And so you need to have division and physical separation of the people who have knowledge of the keys if you're doing a multi-key type of
Yeah.
solution like that. So, yeah, that's a big consideration, and especially if someone sees themselves with long-term holding. Like, because there is particularly in the Bitcoin space, there's a lot of people out there say that you just never sell your Bitcoin. You know, this season it goes up to 250,000. 4 years from now it goes up to 2 million. 4 years after that, it's the moon, and that strategy requires an inheritance plan to go with it because things happen.
Well,
So
and
true.
to that point, I don't think we've discussed this, but we have solutions to be able to borrow against the assets through partnerships that we have. Um, some people don't want to sell the asset. We don't recommend that they take a high LTV loan against it because we do see bear markets and there's significant downtrend. And you can get liquidated if you're not able to, fill the gap there on the collateral. But that's another great way to mitigate taxes without losing exposure to the assets and get access to liquidity.
Very good. Very good. All right. Hey, so if somebody wanted to work with you and to just get some initial planning, I mean, how would they start that discussion?
Yeah, so we have a couple different websites and ways that you could begin that journey. You could just reach out to me and my team at the family office through digitalfamilyoffice.io. You can go on there and book a meeting with myself or one of our team members for initial consult. If you wanted more of the wealth management side and the custody and those solutions, that's going to be at digitalwealthpartners.net. And you can set up a time to meet with one of our licensed financial advisors that can advise you on your digital assets. And then lastly, like I mentioned previous, we do have a mastermind group in a community. Let's say you're not really to the point where you know if this is the right fit for you or not, or you just want a better understanding and education. That's going to be mastermind.beyondbroke.com. And there you can, we have a social membership. It's like $25 a month, and you can kind of dip your toe in the pool to see, if you just want to learn a little bit more or you're hesitant. So those are the three ways that people can begin a journey working with our team.
Thank you very much, Jake, for being on our show, and thank you for the input that you've brought. I mean, you're providing a unique space, unique needs for people that aren't really being addressed anywhere else. If you're an investor, definitely check out Jake's asset and wealth management strategies. Thank you very much, Jake. And everyone remember, make money, pay taxes, and make more money. Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton is one of the top experts in crypto taxation in the US. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.